Good morning, my dear students. Today we are going to start our new chapter, which is named as depreciation. Okay, so today we will be starting with depreciation accounting. I hope all of you are able to see the content what is mentioned here. It is depreciation, and what is depreciation all about? Depreciation is nothing but the regular reduce in the value of non-current asset, or you can call it fixed assets which are tangible. Okay, regular use of fixed assets like building, your mobile phone, vehicles like bike, car, or machines that we use in a business. All these things, as we use it, what will happen? The value of that particular asset will go on decreasing. Okay, with the use of that. What do we call the use? We call it wear and tear. Okay, as you use something, there will be wear and tear. The phrase wear and tear means using a particular thing, and because of the use, it is getting the value of that particular thing is getting decreased. Okay, so when we talk about depreciation, depreciation is all about decrease in the value of fixed tangible assets. Now, what is fixed tangible asset? Fixed tangible asset means any asset which is, what is fixed asset? We have learned in the terminologies. Fixed asset means all those assets which are going to be in our business for a long span of time. And what is tangible asset? All those assets which we can see, touch, that is called tangible asset, like furniture, building, land, okay, all these things. But in case of land, depreciation is not applicable. Other than land, all other assets, all other non-current assets or fixed assets, it is applicable. Okay, I want to repeat, remember, fixed tangible asset, it will not be applicable. Depreciation is not applicable in case of intangible asset. Intangible asset, we call it amortization. Okay, decrease in the value of intangible asset, we call it amortization. But decrease in the value of fixed tangible assets like building, furniture, machinery, all these things, we call it depreciation. Okay, and why there is decrease in the value of asset? Because of the wear and tear. Clear? Now, when we talk about depreciation, depreciation basically has got quite a few lot of formulas. Okay, certain number of methods has been developed, but for our syllabus point of view, or from the point of view of our syllabus, we will be concentrating only on two main formulas. One is straight line method, and the other one is diminishing balance method. Okay, we will talk about that one by one in details. Now let's see what are the things which is influencing our depreciation. Kyun hota hai depreciation? Why there is depreciation? Why do we need to calculate depreciation? So first thing is, the cost of asset is highly influenced by the price of the asset. What is the price of that particular asset? Then carrying charges of that asset, and any other capital expenditure like installation of that particular asset, or setup of that asset, or making any major changes in that particular asset. Okay, all those things are coming under capital expenditure. Any expenditure you are making on the asset at the time of purchasing or acquiring the asset, and that benefit you will get for a long time, that will be called capital expenditure in this case. Okay, so factors which will be have which you have to consider, or what things you have to take into note while calculating depreciation. First thing is the cost of the asset, which will include price of the asset. Like suppose a refrigerator, okay, you have purchased it, say for example 10,000. Okay, and you have made an expenses of 500 rupees for carrying. So now the value is 10,500. Now while installing that, you need some electric connection or some extra fittings and fixtures need to be done at your home. So you have made certain expenditure on that, which cost you say around another 200 rupees. So now the price of that particular refrigerator for you, it will be not 10,000, rather it will be 10,000 plus 500 carrying charges plus 200 of other capital expenditure, which will bring it to 10,700. Here I have given one example. Suppose the asset is having 15,000 rupees of price, and 1000 rupees you are making any carrying charges, and 500 rupees for installation or any other major repair that you are going to do at the time of purchasing the asset. All the sum together makes the cost of the asset, that is 16,500 rupees. The second thing what we have to carefully watch while calculating depreciation is estimated useful life of the asset. What is the life of the asset? Estimated useful life. Why I'm talking about estimated? Estimated means you don't know exactly what is the life of a particular thing, isn't it? We are not sure about future. So how can you predict that a machine will be running for 10 years, 15 years? We don't know that. We predict it. It might be possible that the very next day the machine will not work. It might be possible that the machine will work for 20, 30 years. There will be nothing. There will be no major problems. Okay, so it can happen. So just because of the reason that we have got some estimation, you might have seen that some of the laptops it is working for many many years, while some laptops don't work for even 1 year. So that is the estimated. We estimate how long the life of that particular asset will be. So that is called estimated useful life of the asset. Okay, let's assume here it is 5 years. So we have got, actually every time we don't need to assume, the question will mention that. Okay, here we have assumed it 5 years. Then next comes the residual or the scrap value. What is scrap or residual value? The value of that particular asset or the remaining of the asset which is there with you, but the asset is no longer useful. You cannot use the asset anymore. Okay, you, in a very common language we hear it as loha tin. Okay, so but it's not that. Scrap actually means it's now it has been in such a condition that you cannot, it is not usable. Rather you can just sell off the whatever the remaining parts is there, you can sell it off. So that is called a residual value or scrap value. Okay, in this case let's take it to be 1500 rupees. Clear? So what you have to consider: cost of the asset, then estimated life of the asset, and residual value. Residual or scrap value means the value of the asset which is remaining after the use. Clear? So what will be the situation in this case? Okay, what you have to see, what you have to do is that you have to consider it for the purpose of depreciation calculation. Just I'm showing you that, showing you here. Yeah, so what will be the depreciation here? Calculation of depreciation will be done like this. Calculation of depreciation will be done calculation of depreciation will be done like this. What it will be? Cost of the asset minus scrap value. Okay, cost of the asset minus scrap value, whole thing divided by, okay, the cost of the asset, like suppose here it is 16,500 minus the scrap value, whatever value you will get after the sell, after selling the remaining residual value or scrap value. Okay, that is that will be there, divided by estimated life, estimated life of the asset. Okay, so this is the formula: cost of the asset minus scrap value divided by estimated life of the asset. Okay, so in this case how will you find it out? See, what is the cost of the asset we got? It is 16,500 rupees minus what was the scrap value? Scrap value was 1500. Okay, whole thing divided by the estimated life which we have taken here is 5, right? So what is the amount of depreciation you are going to get? I'll just explain how it came. So here it is 16,500 minus 1,500, it is coming 15,000, divided by 5, it is coming rupees 3,000, right? So this rupees 3,000 is nothing but the amount of depreciation you are going to get. How it came actually? Actually it came like this. See, depreciation means what is the value of asset you are losing every year. Okay, losing every year means the value of the asset which is getting depreciated or depreciated. Okay, kam ja raha hai value. So how much it is decreasing every year? See, we have got the cost of the asset as 16,500 after, and we can use it for 5 years, right? After 5 years also we are getting some value. After selling the scrap we are getting 1,500. So 16,000 was the cost. Out of that 1,500 already we are recovering. So how much we are losing? We are losing 15,000 rupees. And this 15,000 rupees we are losing in how many years? 5 years. So every year how much we are losing? 3,000. So that is the depreciation. Okay, that is the value of asset we are losing every year. So that is called the depreciation. I hope all of you have understood. Okay, clear? And this formula will be applicable when the rate of depreciation is not given. Clear? When the rate of depreciation is not given. Rate of depreciation is not given. Clear? When the rate of depreciation is not given. Now coming to the next one, when the rate of depreciation is given. I've also mentioned this formula here, so that's okay. We are going to use that. We have already given. We already done that. Now, if I want to calculate the rate of depreciation, okay, this is a formula. You can see this also. When the rate of depreciation is not given, you are going to use this formula. When the rate of depreciation is not given, depreciation will be cost of the asset minus scrap value or residual value divided by estimated or useful life of the asset. You will get depreciation per year. Okay, so here was the example. This we have already done. So this is the example. Now, how to calculate the rate of depreciation using the same thing? How will you calculate the rate of depreciation in this situation? Okay, when the rate of depreciation is not given, how will you calculate it? So to calculate the rate of depreciation, you have to use this formula. Rate of depreciation equals to depreciation per year. How much depreciation per year is there? Divided by cost of the asset multiplied by 100. Okay. So depreciation per year, how much we are getting? 3,000 rupees here. And what was the cost of the asset? 16,500 multiplied by 100. So it is coming 18.18%. So this is the rate of depreciation every year. Okay. This is the rate of depreciation every year. How it came? Depreciation per year, that is 3,000 rupees, divided by cost of the asset. Cost of the asset was 16,500 rupees. Okay. So 3,000 divided by 16,500 multiplied by 100, we are getting the percentage of depreciation every year, which is 18,500. Okay. Now coming to the next one, when the rate of depreciation is given. Coming to the next situation. This is the first situation. Coming to the next one, when the rate of depreciation is available or given. ठीक है, अगर रेट बताकर दे दिया. Example, we have taken example here. So how will you do that? Cost of the value of the asset is given 80,000 rupees. 80,000 is the value of the asset. Let the asset be any asset, obviously non-tangible, sorry, non-current, tangible, non-current asset, and the rate of depreciation is 15%. It will be given in the question, so nothing to bother about. Okay, if the rate of depreciation is available or given in the question. Okay. So what we'll do, if it is given in the question, if it is given in the question, is very, very simple. What you have to do, just simply find out what is the cost. The cost here is 80,000 rupees. The rate is 15%. It will mention the question. So how will you calculate depreciation? Depreciation per year will be very easy. Cost of the asset, that is 80,000 multiplied by rate of depreciation divided by 100. Okay, that is cost of the asset 80,000 multiplied by 15 by 100. Okay, so it is coming 12,000 rupees depreciation. Depreciation per year will be 12,000 rupees. I hope this part is clear, everyone. Okay, now in the next part I will show you the journal entries of this particular depreciation chapter. Okay, thank you. Please make the note of all this. In the next part, as you can see in this screen also, next part I will be explaining the journal entry of this depreciation part. Okay, please take care. Bye bye.